initiative around wheat trade was 7 banks, now it's 14 banks. They've come together to help simplify SME financing in Europe. Access to financing for these small and medium businesses is very difficult. This consortium is made up of competitors. Competitors like Deutsche Bank, HSBC, KBC, Societe Generale, and the likes. And they're all coming together so they can collaborate on each other's counterparty risk, but still provide competitive services to the SMEs in the local market. This is an underserved segment, and they are championing the ability to bring financing to the SMEs. So I'm going to take a little bit of a detour to the Korea market, and I've been instilled the importance of the initiatives from the government around access to funds for SMEs. I did a quick read up on the SME market. 99% of enterprises in Korea are SMEs. 99%. That's an interesting classification. 89% of employment in the country is by SMEs. That's an interesting number as well. 89%. And that's I think 60% of that is primarily in the manufacturing and in the retail segment. Again, an interesting statistic, followed by 40% of that trade actually is done with cross-border. And guess what? Your top 3 actual trade partners are Japan, China, and interestingly, Vietnam. Apparently, you've been doing a lot more trade in the Vietnam region than other countries. That implies you need a robust financial system to bring access to your SME segment. So, challenges in the SME space is access to funds. Let me also give you another World Trade Organization statistics. 1 in 2 SMEs live for less than 5 years and they close shop because of access to funding. Access to funding, financing. If you could change that just in the Korea market, I know there are initiatives from the government, but I know as financial institutions, you are trying your best to break down that barrier and bring that financing to farmers, to little shops, to the ones who provide nuts and bolts and semiconductor manufacturers. How do you do that? By taking, not increasing your risk, rather decreasing your risk in a very effective form. So here are some of the issues that's being faced in today's world of supply chain financing. Large conglomerates like Samsung, Hyundai, LG, all these institutions rely on other manufacturers, suppliers, and as well as the dealers in order to have their ecosystem filled up. To that context, they are the principals. You have the suppliers who provide them the parts, and then you have the dealers who actually take the finished products and sell it in the market. The issues that each one has is very unique. The biggest issue that Samsung and LG, all these guys face is reconciliation of the goods, challenges with the supplier. They also have severe high risk of delivery and missing deadlines on delivery because of financing issues down the chain, not with the first tier supplier, immediate supplier, but the supplier's supplier and 3 levels down. Similarly, in the dealer side, they're dealing with access to funding. They're carrying inventory, but no bank, no financial institution wants to carry the risk. they have to go seek funding from lenders who charge very high rate. And in all of these, financial institutions struggle with being able to provide unsecured loans, being able to have access to credit history of these SMEs, and lack of delivery information, transaction history with these large corporates. How we can address this problem with this technology, and the solution that we have is what we call as deep tier financing. If you think about it, the solution here is how do you connect all these entities that's involved in the supply chain into a single shared truth ledger that can provide that visibility when Samsung actually gives out a purchase order to a supplier. Can you trace that purchase order all the way from tier 1 supplier who raises an invoice to tier 2 supplier who actually provides supplies to tier 1 supplier, and then from tier 2 supplier to tier 3 supplier and below? If you're able to trace the entire supply chain visibility, why can't then a financial institution take the risk? Because the primary PO originator is actually the Samsung or LG or one of these large conglomerates. The challenge in today's world in the market is tier 4 or tier 3 or tier 2 the financial institutions don't have the visibility that the PO was originated in the primary principal, which is the conglomerate. The same thing exists in the dealer side as well. Being able to, Samsung and LG use a distributor and a dealer eventually to end up that phone or whatever equipment at the retailer, but the retailer does not know which lot from LG or Samsung it actually came up for. The financial institution involved doesn't really know that. So being able to bring them all in a single network and have deep tier traceability all the way from the origination of the PO or the invoice to tier 5 of the supplier and all the way down to the dealer and the retailer, incredible value to the financial institution, and therefore you reduce your risk. So you don't have to provide rates as high as the outside market does. You can actually control your risk and improve and help the cash flow in the market. This establishes a common platform. We are talking about how do we improve the overall infrastructure of the country when a financial institution can bring its own ecosystem into a common platform that allows complete visibility across the ecosystem, and suddenly you have a better financial system for the country. Here are some of the benefits that's each one in the ecosystem gains. As a financial institution, you reach new customers, the tier 2, tier 3, tier 4 customers you never had. You have them now because you have visibility into the purchase order that was initiated by Samsung. The same way, a tier 2 or a tier 3 supplier actually benefits because they now have access to a tier 1 or a tier 2 bank providing better financing rates than a really rate gouging lender. When you build a system that's rooted in identity, KYC, reliant on elements of technology like IoT, when we are able to leverage provenance and the visibility that's available through this technology in a systematic fashion, and when you are able to automatically do settlement, payments, using technology, and therefore reducing the counterparty risk, you are then establishing a new ecosystem for financing in the country. We have a number of case studies on these. This truly can change the way how financing works in the market. We have extensive experience working not just in dealer financing and supply chain financing. When you do all these, account open account. I mean, look, today letters of credit is not is a very old technique and not that relevant. Being able to do open account and invoice financing using open accounts, incredibly valuable, much faster to do. Letter of guarantee, that's business as usual, but being able to do that with your other banks digitally, electronically, trust your supplier, which is primarily around KYC for these SMEs as a single utility across all the for the entire country as infrastructure, tax and KYC sharing across the financial institutions. These are all areas that could change the way that the country's financial infrastructure can operate. But let me kind of remind you, this is in motion. I know you're thinking about it as a country, but so are other parts of the world. The value that you get is when you interconnect these networks. Flow of goods, which is the food trust, flow of documents and data, the trade lanes in the shipping network, combined with financing from the banks. When you connect all of these, this gives you a new world that we all operate in. This is the future. This is going to become the reality. We talked about blockchain as a technology, but blockchain is just a substrate. When you connect this with IoT, AI, automation, and advanced analytics, suddenly you are creating a new operating system for the world, a technology platform where companies can boldly disrupt themselves. This becomes the new platform of change around the world. And really, the value that they get is in establishing new ecosystems, new economic models. But blockchain has been around for a while, right? And last 3 years, a lot of emphasis. Why is this challenging? Why are we not seeing more adoption in the field? It's truly a very fundamental question. When this morning the Vice Minister actually stood up and said, "Winner takes it all," he has a point. How do I as an organization or I as a country differentiate myself compared to anyone else? He has a very good reason why he wants to be the best in the world to do it. But the reality is that there's no one country that can take it all. The reality is that you have to exist in a world where you have to collaborate. So in a blockchain network, it's very important to understand why you are doing this. Are you doing this for regulatory compliance? Are you doing this to create a new economic model, new ecosystem, new revenue opportunities? Are you doing this to differentiate yourself, or are you doing this to be compliant and increase efficiency and cost savings in your organization? You need to have a good purpose, good motivation how you do it. But that's not all. See, the interesting thing about this ecosystem is not everyone benefits equally. Everyone gets something different out of the same initiative. So how do you equalize? How do you get everyone to play well in this ecosystem? What kind of incentive models do you need to introduce? Incentive can be tokens, incentive can be hard cash, incentives can be benefits those organizations realize by being as part of this ecosystem. what really works is an open engagement, an open governance model, an open source kind of a format, standards, and actually show why you should be the first mover in the market. IBM has worked with, I told you, 600 plus engagements around the world. We have extensive experience doing joint ventures, these kind of consortium launches around the world, but frankly, working with organizations to differentiate themselves. This is a network launch methodology, and here's a path how organizations can get started. Either you join an existing network, or you establish a new one with your own ecosystem. Both of them very viable, but very different paths to get to ROI. First, thank you. Thank you for the opportunity. You guys have been great. I hope this made sense. Thank you very much.